What's up, guys? Eric here. Want to bring you a quick update on the community portfolio. Lots of exciting news over the last couple of days, some big earnings reports. I'm going to give you some of those highlights and show you the entire portfolio. This is the community portfolio. It's at a new all-time high today, pushing $260,000. Now, in case you're new to the channel, this is one of 3 public portfolios. The community portfolio I'm covering today is me pretending I'm 20 years younger, trying to grow to $1 million status. There's also a new portfolio we started this year, a dividend portfolio that's $180,000. And then the main portfolio is over $3.1 million today. The combined total, almost $3.6 million new all-time highs. As you probably know, NVIDIA is our top holding. Right now, it's about 8.84%. It's up 1,151% in this portfolio. Of course, in the main, my cost base is even lower, under $4. But this is a great cost basis, $14.37. We started this portfolio in 2022. And if you remember, that's when we said that NVIDIA was a must-own stock for any portfolio, pound the table $15 or less. And this is why we have such a good cost basis in this portfolio. Overall, NVIDIA had a strong print last night. You can see a beat on the revenue. You can see a beat on the EPS. The data center revenue was slightly under. You can see 0.1 billion miss. Gaming was actually above. And really, if you look at this number, $46.7 billion, that's in one quarter with zero revenue from China. And I spent a lot of time updating you last night on earnings, not only for NVIDIA, but also MongoDB yesterday, Snowflake last night, CrowdStrike, and more. On the earnings call last night, one of the highlights that stood out is that we're going to see between $3 and $4 trillion of AI infrastructure by the end of the decade. One thing to note about China is it's about a $50 billion market, or TAM, and it's the second largest computing market in the world. This is a quote here from Jensen Huang, also home of AI researchers. About 50% of the world's AI researchers are in China. So of course it'll be a big deal if the US government allows NVIDIA to sell back into China, and we believe that is happening. They're building a new chip. So when you look at that Street Whisper guide of $55 billion, I think there's a good chance that we actually beat that this next quarter if we get some China revenue in there. And what's interesting about this, if you look at short interest, of course, that's gone down over time. And then this forward PE ratio, I mean, if you look at it, it's as cheap as it's been for a while. You know, this is August 2015. You have a forward PE ratio of 30, and it's below that right now. And we've seen as high as close to 55, 60 between 2021 and 2022. You also see the margins, how they dipped, but they're starting to climb back up. And we're in that mid 70%, which is good. Now, of course, you're going to see headlines, because headlines like this are going to get attention. NVIDIA forecasts the accelerating growth after 2-year AI boom. Well, that implies that the AI boom is over, and it's just simply not. Wall Street analysts haven't understood NVIDIA the entire time, so don't expect that to be any different now. NVIDIA stock is going to go over $200. The quarter was solid. Could the stock bounce around? Could you have some consolidation? Sure. I'm not saying it's going to go to $200 tomorrow, but this is the chart that Bloomberg is showing you that, oh my goodness, NVIDIA sales growth decelerates from eye-popping levels. Now we're talking about 200% and 300% in some of these quarters. This is still strong. A better way to look at this chart is this right here. And it's absolutely mind-boggling to think of the growth. This goes back to January of 2020. This right here is when we really started to see that AI story come to fruition, and it's exploded since because of CapEx spend from those big dogs, those mega cap tech names. Now this is actually sorted right now by total gain and loss. So you can see NVIDIA and RKLB both up about the same. Crazy, 1,151%. But NVIDIA is closer to 9% of the portfolio, whereas RKLB is 1.81%. Now we have taken profits on both of these, so they are house shares at this point. So when we look at the second largest position in this portfolio, it's ALAB. We have taken profits on that around house shares, but we're sitting at 7.98%, currently up 188%. And this is a new position in 2025, so it's done very well. We currently have 110 shares, looking to trim maybe 10 more shares and get this down a little bit. We like to keep it closer to 5%. So we're breaking a little bit of discipline on both of these stocks, but that AI trade is very much still intact and there's upside. We've also taken profits. We're sitting on house shares, so that is important to note. With the Astera Labs, you can see we got down to $47.13 just in April of 2025. It ripped to $199.47, so almost $200. Talking about a $153 pop here. And of course, it's had some consolidation, but surprisingly, it's still holding pretty well at $189. $29 a share today. Now, as I'm making this video, I just got an order to sell 5 shares of MongoDB at $319.97. That's the limit order that I had in. MongoDB, as you know, reported earnings a couple days ago, and it's been on absolute fire, up something like 38, 39% the first day, and up another 10% plus today. Correction, 8.05% today. But you can see in the past 5 days, this stock is up over 51%. And really, that's just in the last 2 trading sessions. Market cap right now is just under $19 billion. 52-week high was 370. The stock got down to 140. So looking at that MongoDB chart, 140.78 was the low here in April. Today, 320 bucks up here. So the R3 is at 280. I told you guys it was going to go 300 plus. Here it is at 320. It's probably a trim area, but the reality is it more than likely goes to 350, maybe to 370. A lot of the price targets I'm seeing are in that $380 to $400 level. So there is some upside here. At the same time, if you went a little bit aggressive, maybe you're overweight and you're buying heavily, in this $160, $70, $80 level, it's not a bad idea to take a few chips off the table. In the end, do what's best for you, what's best for your blueprint. Of course, I can't give you any financial advice, but MongoDB is now the 3rd largest position in the community portfolio, and it is 5.48% of the account. This is before those 5 shares just sold, so we're now at 40 shares. This is going to update, be closer to 5%. I want to keep MongoDB below 5%, and I'll continue to trim it as it goes a little bit higher. I do think you're going to see 350 plus, maybe even $400 in the next several months. Depends on the momentum of the overall market, of course. Then, of course, we have SMH at 4.64%. This is a new position, started really in the dip in April primarily, and that's up about 30%, but this is a long-term hold. We were trying to get more ETFs in this portfolio. And next you have Snowflake, up 19% today after earnings last night. We're now up 80%, 4.37% of the account. Snowflake is currently above this R3 of $241.13. Did fight a little bit, had some resistance here from these highs in February of 237, but we have blown past that. I think you could see 250 plus. I'll be trimming between 250 and 275, watching the charts. I still like the stock long, but I will admit that I maybe am a little bit overweight in both the portfolios in Snowflake. It is good to see that story come to fruition. As I've been telling you, MongoDB and Snowflake are going to be beneficiaries for phase 2 of AI, connecting those LLMs, and you're starting to see that story play out. So next we got cash. Now it shows you 3.84%, but we did actually sell a position today. Now this was a smaller position. It was less than 1%. I believe it was 0.91%. And this is Photronics Lab. We had 100 shares in this portfolio, sold out of the position at $23.57. And as I explained in Discord, we broke even. This was a 2024 experimental AI fringe play. We kind of bought it as spec, even though the PE ratio was something like 12 and it looked like a great value. I wanted to give this one more earnings report to see how things are shaping up. And they did report earnings yesterday, and the results just didn't impress. Hasn't really impressed for several quarters. They reported 148 million in IC revenue. Problem is, this is a 5% year-over-year decline. Now, this portfolio is focused on growth. This doesn't pay a dividend. It's not really growing. So why is it in the portfolio? It shouldn't be, right? So it's time to sell. I'm happy to break even and raising $23.50 in cash. The growth simply isn't there. I feel that the money be invested better elsewhere. On to the next one. Taiwan Semiconductor is next at 3.23%. We are up about 42%. This is another new position in 2025. Most of the shares being bought in April. Then we've got AMD. That's also been a great winner for us. Of course, we were really strong in this stock, $110 or less, preferably under $100 DCA. Then got down to $76 in the 52-week low here in April. Now back to $167, and it was as high as $185 here recently. In fact, $186.65. So a little bit of consolidation should be expected here. Still above the 50-day moving average. More than likely, you see AMD eventually with time, assuming the AI trade stays alive, get to this R3 around $213. I think 200 plus is probably a trim area. Some of us were also trimming between that 175 and 185 level. It's still a good long-term investment. It's interesting. I see YouTube comments like yesterday. I think that AMD is a much better buy. There's more upside. It's cheaper. It's not cheaper than NVIDIA, but if you're using the theory that, well, NVIDIA is a $4.5 trillion market cap, of course, it's going to be really hard to double from there. Whereas AMD is a much smaller market cap. We're talking about $271 billion. So, you could get a 4X and still be a $1 trillion, $1.1 trillion company. So I get the logic, but it's still expensive. Do I like the stock? Absolutely. That's why we were buying it down in these levels. I don't think it's a buy here, but it definitely was a buy, $100 or less DCA. Now, a newer position for us is Eli Lilly. You can see we're up 8%. So this is a new position we We're not up much yet. It's 2.53% of the account. This got down to 623 on the 52-week low, 52-week high, 969. So currently the stock is trading at $730. So you can see a nice bounce from 623. I think Eli Lilly, this R3 is 850. You probably see it get back in this 850, 900s. It's going to get resistance when it gets in this 900s and 972 level. We kind of had a double top here around 970, so pretty strong resistance at 1,000. But this is the kind of company, if I'm buying it in the 600s, I feel pretty good about it because I think it'll get back to these levels with time. And it might take a year, it might take 2 years, but I feel pretty good about Eli Lilly's long-term prospects. Next, we got Coherent. We are up 56% on it. It's 2.3% of the accounts, 2.32%. We have 64 shares. I just did a write-up / audio podcast on this. So if you haven't seen that, or if you haven't listened to that, go check it out on Patreon. Datadog. What's funny about that is one of our members just sent me an email who actually works for Datadog as I was literally getting to Datadog next here on the list, but 2.28% of the account, up 67%. We've done well on this. The cost basis right now, average cost basis $83. Last price in the stock here, $139. Next, we got SPRX. This is the Spear Alpha ETF, up 71%. It's 2.17% of the account. Then we have Clearwater Analytics. That is 2.1% of the account. It's only up 1.7%. I do think it's a buy, $20 or less DCA. Right now it's at $20.27. I also did a write-up on Clearwater Analytics on Patreon, so go check that out if you haven't read that yet. Roblox, huge winner for us here. It's about 2% of the account. This is all house shares, up 330%. Micron's 1.8%, up 54%. We got Marvell Technology, 1.85%, up 58%. Rocket Lab, we talked about earlier, it's up 1,100%. This is house shares, currently 1.81% of the portfolio. Even Google's up over 100%. We got a $103 cost basis, 1.76% of the portfolio. Next, we got Uber at 1.72%. We are up 45% on this one. Cost basis is around 65. Now, CrowdStrike had earnings last night. Check out Discord if you want more on that. Overall, it was a good quarter. The street didn't really like it at first, but what's funny about it, the stock actually traded down last night, something like $380, and now it's $437. So a big rebound after the earnings call. It is up 3.46% right now. It's 1.7% of the account. We have trimmed this close to house shares. It's up about 300%. Amazon, new position in April on the drop, up 26%. It's 1.7% of the account, 19 shares. Skywater, which I recently sold a big position of this at $12 and change, around the price it's at right now in the main. I'm trying to de-risk the main and get rid of some of these smaller caps and some more speculative type names, but this is house shares on Skywater. We've trimmed this several times, 1.53% of the account. SOFI is another one that's house shares, 1.51% of the portfolio, up 450%. Melly was a new position in April. I like this, one of my top high conviction stocks. It's 1.43% of the count. Woulda, coulda, shoulda bought more in April. Palo Alto is a new position. We thought it was an opportunity, 175 or less DCA. Now it's trading at about $190 a share. Coulda, shoulda, woulda bought more, but it is 1.39%, up about 10%. I do like this as one of the better stocks that you can buy for cybersecurity. So of course we like CrowdStrike as our number one pick. Palo Alto would be in there as well with, Datadog. And if you look at some of these other ones like Zscaler, we own in this account. Cloudflare, which I don't own in this account, but do own it in the main portfolio. We have SentinelOne in here as well, as you'll see as I keep going, but don't have as much conviction on that because it focuses more on SMB. And that's also the reason we don't own stocks like Fortinet as well. Confluent, the first red, it's actually negative 1.23%. It's smaller position, about 1.38%. Our cost basis is $19.86. It's trading at $19.62. Most recently here, the stock got below $16 a share. We've told you it was a buy in that area. And if you bought some recently, like a new position, you're doing pretty well on it. I do think this will get back into the 30s. The 52-week high was $37.90. Tesla, it's only 1.37%. It's up 137%. We have trimmed some of this as well. Our cost base is $144. I do like this stock. I don't have as much conviction as some of our other members, such as Derek, but I do think there's huge TAM for Tesla when you look at robotics, when you look at robo-taxis and Optimus and more. So definitely check out Tesla. It could be one of those that, it could still give you a massive return from these levels if you're holding it for 5-10 years from now. Trade Desk is another red. We're actually down 3%. It's 1.28%. Currently trading at $55.35. I think it's a buy probably in these levels, but my preference is below 50 if it gets in those levels. I have an order to buy in this portfolio at $49.97 or something, and it might not get there, but I'm comfortable with 1.28% for Trade Desk. C Limited is house shares. We've trimmed it many times. It's still 1.28%, up almost 400%. 1%. Cost basis $37.80. Remember, guys, this was a new portfolio in 2022. So we're only talking about 3 years going from zero to $260,000. You can see that we're crushing it. And every single one of these stocks I've covered on YouTube at one point in my best stocks to buy series. So if you aren't subscribed here, make sure you subscribe now and click that bell for notifications. Celsius, I do own this in the main as well, and I'll probably transfer some shares into this portfolio from the main as I do some rebalancing, but it's about 1.15%. We call it spec, up about 79%. This is one we were buying, this time last year when I was in Hawaii last year. So it did get down to 21. We certainly didn't time that perfectly, but we are making some money on Celsius. It is back to about $60 a share, and it could go back to that $100 level with time. SiTime House shares currently 1.13%. Consider it spec. 225% on the P&L, $75 cost basis. Right now it's trading at $245 a share, which I think is pretty expensive, but the stock probably keeps going higher. That's why we continue to hold some shares. Zscaler, a little over 1% of the portfolio. It's up about 75%. We have 10 shares at $160.81. Unity is actually in the green. It was red for a little while. It's up only about 3%. Has been a laggard for us. Consider it spec. It's about 1%, 70 shares at $38.90. ACMR has been performing well recently. In fact, it got to $32.54. It's now at $28.68. We are up 72%. Consider it spec, so we're trying to keep it at 1%, and it has done well. SOX, semiconductor ETF, up about 100%. This probably should be a little bit higher, but remember, SMH is one of our top 5 holdings. So we kind of position SMH as well as SOX in here because we are still very bullish on semiconductors longer term. Cost basis $126.88. Then we got Navitas, and this is another one we have trimmed. I keep saying house shares, but I think it's important to note, we've taken profits. It's still up 100%. Spec, so we're trying to keep to 1%. And this stock is trading at 6, but it was high as $9.48 here recently. So hopefully you've taken some profits on Navitas. It is extremely risky and volatile. It's a high beta name. It's expensive. Kind of throw it in that meme stock category. So just be careful on names like Navitas. It's not a high quality name. Could be a 10x or 0 type of a stock. VGT, one that we started buying, I think August of 2024, and then bought a few more shares. Really, we buy this opportunistically when there's a big drop in the market and we're just kind of panicking. What do I buy? Panic buying, like we call it. So we've bought some shares. We've got 3.5 shares or so. Cost basis $551. Would like to continue to add and just hold this very long term. Remember, guys, we're trying to build this portfolio from $0 to $1 million as fast as possible. So I am putting in $5,000 a month and trying to aggressively grow this portfolio out. And some people will say, well, that's not realistic. You're trying to be a 25-year-old, 20-year younger version of yourself. It's not realistic for 25-year-olds to have $5,000 a month to invest. I agree. Don't get fixated on those little details like that. At the end of the day, it's not that I'm trying to, and when I'm 25, I'm not necessarily trying to grow a portfolio to $1 million in 5 years like we're doing here. But the way we buy is still going to be the same. The way that we dollar cost average is still going to be the same. You might not be able to put 5,000 in a month. Maybe it's 500, but you probably have a longer time frame too. Why am I doing it that way? I'm doing it that way because I'm trying to be as active as I can in this portfolio. Would you rather have me put in $50 a month and buy nothing and just have it sit there and be stale? Or do you want me constantly buying to show you how to dollar cost average for the educational value of it? And I think that's most people would agree. You'd rather see me buying more than less. And so that's why we're putting $5,000 in a month. And then we're trying to make it fun. Like, can we grow this to $1 million in say 5 years from now? And that's what we're trying to accomplish. SCHG 0.91%. We got India Spec. That's another one that's actually red. This has not done well. It's been a laggard, and we got down to $1.53. It's now $4.73. Cost basis $5.21. Admittedly, I didn't buy when it was down because we were at our 1% kind of max that we wanted for the portfolio. Now, with that said, what you see here is house shares for Indy. So we've told you several times when the stock pops to take advantage and trim some shares out. This is another spec play. So you're talking about a 10x or 0, high beta, high risk, small cap stock. Microsoft is up 105%, smaller position than maybe I'd like, but remember, we're focused on growth here, and Microsoft's much more of a mature play, DJIF type stock. So it's good to have it in there for some dividends, some diversity, some sleep well at night, some core, but it's not gonna get you rich either. Like if you're trying to grow wealth as fast as you can in accumulation phase, Microsoft probably isn't your primary focus. It's just one of those sleep well at night stocks. Senna One, never really been big on it. This was voted in by the community, and it's really been a laggard because we've owned it for a couple years and it hasn't done much for us. Sure, we're up, but it hasn't done very well. It's just been a dog. I mean, it's just sat in these levels for months and months. Let's look at a chart. So it's been more of a yo-yo than it's sitting in one place. $30 all the way down here to $14, $30. It's kind of one of those that you buy at $14, $15, you trim at $29, $30, and it's kind of a trader momentum type stock that yo-yos around, but if you look at 2022, we were buying kind of these levels and we round tripped. So we bought here, doubled our money, might have trimmed a few shares or something, but we're right back to where we were. And then we got QQQ, we got some Shopify. This is a new position. This is brand new actually in April. So woulda, coulda, shoulda bought more, but obviously still happy with a 96% gain. Now we got some small positions here, guys. So Excelis, WCLD, which I think I'm probably going to sell out of this actually. Meta Platforms, this is also a new position in April. Shoulda, coulda, woulda bought more. It's only 0.58% of the count, but up 51%. Same story here. New position in April, up 131% on App 11, but didn't buy as many shares as we could have. Klaviyo, this is a smaller speculative type play. In hindsight, probably would have been a good trim at 49.55. I think I actually tried selling it at 50 and just missed, but it's now 32.66, small position. It's not one that I have huge conviction on, which is why it's smaller. I think if it gets back to that 50 level, I probably trim out of this stock completely. Apple, we've had it since we started the portfolio and haven't added, which is why it's small, but up. Same with VU. Bank of America was just something that we thought was a good buy on one of those sell-offs. We had the kind of the banking crisis. So we look at this, there's some small positions. This is a Bitcoin ETF. We got Rivian, doing nice, making money on these, but they're very tiny positions. And so I have to kind of make a decision. Intuitive Surgical is a new position. I'd like to add more. I'm hoping it goes lower. So that one has a good explanation. But like John Deere, it's only 0.34%. Yeah, it's up 52%, but we're talking about $300 gain. What do we do? Same with Texas Roadhouse. Good returns on this, up 80%, but it's 0.34%. UiPath is one that we're going to sell. I'd like to see this kind of pop up and go into the par or slightly green. Probably just trim out of this thing. Toast, it's up nicely, but again, small position. And of course, that fintech is my kryptonite. And so if I look at these two, it's not surprising they're small. I kind of bought them because the portfolio was big on them and could have made money on them. So I look at this and there's probably 10 or 15 names here that we could probably trim out of the portfolio. And that's something I'm going to be working on here over the next several months as we get closer to the end of the year. I'm going to try to trim some of these positions down. Now, I also don't want to trim just or sell just for the sake of selling. If it makes sense to keep, maybe we look at it and say, hey, we want to keep a few of these and add actually dollar cost average up, right? But the core of the portfolio, if you look at this, NVDA 8.84%, Stera Labs 9%. We've got some pretty high concentrations. In fact, what you see on your screen right now is 54.74% of the total portfolio. And if you take these top 5 stocks right here, Snowflake, SMH, MongoDB, Astera Labs, NVIDIA, if you take these 5, that's 31.31% of the portfolio. So those tiny positions I showed you don't really have a lot of merit in the portfolio. And that's going to happen when we have a community portfolio like this because we're buying and selling lots of different names. Part of the reason too why we sold out of PLAB today. Feel free to drop me a comment below. Ask any questions. Let me know what you're thinking. Are you buying? Are you selling? We have a little bit less than 5% cash in this, but we're adding $5,000 every month. The market is a little bit frothy, but it looks like it wants to go higher. Thanks for watching, guys. Have a great rest of your day. Take care.